So congratulations, you're in the right place. You're one of the few people who are doing the right thing, learning about credit cards the right way, how to build your credit the right way so you don't get in any trouble, so you're not in debt, or you're in debt and you're trying to come out of it, so you're learning how to actually build credit right or get back on good credit. You're in the right place. Let's get into it. Hello beautiful people, and welcome to another episode of Janey of Canada, where I talk about all things professional newcomer life. And I'm your host, Janey Buzz. If you're new, start subscribing today. All you have to do is click that button and hit the bell, because all you get here is juicy content, information, resources to help you thrive in your career. You haven't subscribed? You waiting for? Let's get it. So you might start with, okay, Janey, why are you talking to me about credit cards? Are you a finance expert? No. Honestly, I'm not. But this is what I am. I am someone who has been a newcomer to Canada for 5 years, who has successfully built credit to an excellent level. Here's a screenshot right there. Perfect. So that was my credit score, or that is my credit score, and that's usually where I try to keep it. And I can share with you as a newcomer how I was able to manage credit even after taking a debt of about 60K, and how I was able to get an excellent score. Why is this important? Because without credit, there's very few things you can do here in North America, specifically in Canada. I know. So let's start. So at the end of this video, you'll be well equipped to navigate credit cards, how it actually builds up to your credit score, what matters, what doesn't matter, and the best ways to actually using it to get, remember that score I showed you right here again? Something around that, okay? Sit tight. First things to note is you need credit. I was one of those people who was like, I'm not going to take credit. It's my money. And I've seen a whole lot of people credit debt. I have family who are in debt forever. I don't want that thing. It's of the devil. But sadly, in North America, you almost cannot do without it, because if you're going to get any big purchases like a car or house, and you need a loan, sometimes even with starting a business, the government will need to see, can we actually trust this person? And the only way they can actually find that information is how you have been faithful with the little they have made your way. And so, but this video is going to be focused more for newcomers and how to actually start. Because a lot of times when you're trying to rent a house, for instance, they're going to be asked questions like, can I see your credit? And you're like, I don't have credit because I don't have credit history. So the first thing I'll say is you need a credit card to start. You need some form of credit. You need to build credit. Is important. It's not only important, it's mandatory in a lot of spaces. Some people have been able to do without it, but we'll talk about how later on in this video. One thing I've noticed from my experience here in Canada is, and that a lot of students specifically, and some newcomers who are not used to credit and what that means, always get wrong, is it's not your money. The fact that the government is saying, hey, welcome to Canada, you get $500 or $1,000 on this card, doesn't make it your money. So don't go ham. And I'll explain why you shouldn't, okay? The first of which is because if you spend it like it's your money, if it's really your money, you don't need to pay anybody. But you have to pay someone back for this, so you can't spend it like it's your money, okay? Okay, good. So then, if it's not my money, Janey, what is it? So credit is what the government uses to test you. Listen, we're clear, we're clean. Like, I will tell you the truth, okay? I won't tell you what, they can't tell you that, but I'm telling you right now. They use it to test you because they want to say, are you a good, trustworthy, more like it, member of society, where if we borrow you, if we enable you with some services, will you be good with it? And with that, because a lot of times we will still need some government help in the sense of government, bank, maybe not government, institutional help, really, right? So some banks, if we need insurance, if you need to rent, if you need to get a car, a lot of those expenses that we typically as individuals might not have all the front payment for, and we need some support from the government, starting a business, for instance, your credit history will prove to them if you're worthy of certain trust and up to what level, or if you're not, and what that looks like. So with that, credit is usually in 4 big buckets. So there's below average, there's fair, there's good, and then there's excellent. Where we want to be is excellent, and excellent goes around in Canada from 740 something. One second, let me check my notes. Yeah, about 741 up onto 800 plus, right? So that's where you want to be. So let's actually unpack a credit score, like what actually makes up the credit score, because that will teach you what to do right in what you might be doing wrong. And there's a lot of myths around credit cards. Like when I first came, people are like, all you have to do to actually have a good credit score is pay the minimum. Don't pay more than that, because if you pay more than that, how would they know you're good with credit? False. In the first couple years, the whole idea is for you to use before you pay it. Don't just pay immediately, because then the whole idea is they want to give you money now, you have to use it. No, you don't do that, right? So let's talk about actually what goes into the credit score, because all those are myths, and we're not talking about myths today, we're talking about facts. 30% of your credit score is made up of something called payment history. And a lot of times, how do you build that history? And for newcomers who are starting fresh, I'll tell you how you could actually start building your history a little bit more. So 30% of your score is payment history. And what that is, so I'm Janey. I borrowed you money. I'm talking to you. Yeah, I borrowed you money. I borrowed you $1,000. And you said that at the end of the month, you give me $1,000 back. And then the month comes around, you're like, I don't have it, Janey. I have 500 though. And my mind, I'm like, okay, I'll take 500. But I know you still owe me 500. And so even if I'm going to lend you another money, I know now you have 1,500. And then I start to put interest on it, because you've shown me that you're not worthy. Like I trust you less, because the first word you gave me was I'm going to give you 1K back at the end of the month. And now you faulted on that. So with your payment history, they need to make sure that you pay what you owe. You balance monthly. You don't carry a balance. If you do that, you're 30% on your way to the good books. And so there's a myth about, all you have to do is pay the minimum balance. That's a big ass lie. Excuse my French, but it is. Like, it's the better thing to do, but it's not the best thing to do. If you absolutely borrow money from credit and you're down on your luck, or stuff is going on and you cannot pay the full thing back, the least you can do is pay back your minimum. And that's what payment history is. You never miss a payment. Because I learned this at the bank, is what the bank sees, not the credit bureau. So in Canada, there's 2 credit bureaus, Equifax and the other one. The credit bureaus hold the data, but they actually share with all these institutions. So at the bank, say your credit card is given through a bank, what they see is you made a payment. They don't see if it's in full or not. That information is held with the credit bureau. So usually you need to make a payment monthly. And the way I treated my credit card to get here is, if I'm taking money from my credit card, I know that I can pay it back. So I was literally using my credit card for one thing, to build credit history. Like if you're looking at it as free money, you're already on your way to not a great thing. The second piece then that goes into credit score, another 35%. Actually, the payment history is 35%. The second heavy piece is something called credit utilization. Utilization is pretty much how much of the credit you're given do you actually use, and you want to keep that low. The ballpark, or what they'll usually tell you, is you're supposed to spend about 30% of your credit card. Sometimes it's not the case, especially as a newcomer where you literally have 500 or 1,000. So if your credit card limit is $1,000, you're supposed to spend ideally $300 from it. Anything more starts to say, this person is a big borrower. They might be high risk. And anything that flags high risk reduces your credit score, right? Ideally, we know that it's going to be tough. So usually as a newcomer, I always say lean towards spending more money from your checking account, your debit card, than on your credit card, so that your utilization rate is not too high. So they usually say your balance does not need to come close to your limit. So you don't want to, if you have $1,000, spend $1,000. You don't want to do that. You want to spend $300 maximum, right? And until you build your credit. Well, those 2 pieces are already 65% of your score, right? So if you think about it, if you can pay monthly and you can keep your utilization rate low, you're already on your way to a great credit score. The third piece then is your length of credit history. So you know how to talk about building credit history. How long have you built credit in Canada for? And if you're a newcomer, this is 15% of your task, 15% of your score. You don't have to focus too much on that, because that's really beyond your control, right? It's time. All you can do is keep building your credit, paying your minimum, using your utilization rate as a low, and then with time, your credit will grow. When I came to Canada, my credit score was not 800 and something. It was 0, and then it got to 600 and 700, and with time it built up until this. And in fact, I've actually had a credit score of 800 plus for maybe 2 years now. So, about 2 years now. So in 3 years you can get up to excellent, but usually you start on around good. Then the other piece, the fourth piece, it's your hard credit checks. What are those? So usually when you go ask for some loans or money, say in the form of I'm trying to purchase a vehicle, I'm trying to rent a house or buy a household mortgage, or you're trying to start a business, there usually will be a check on your credit account. And you're thinking, how is that supposed to be my fault? It's not. It's just a way for that. And so it's considered a hard credit check on your account because those lenders want to know what your history is like. That said, so the tip there is if you're shopping for a vehicle or you're shopping for a house at a time, do all of that within a 2-week period. So if I'm going to Hyundai, for instance, I'm going to Honda to see the prices of cars, I want to make sure that they're checking my credit within that 2 weeks. Because if I start in January and then do another one in March, it's 2 hard checks in the space of the period of time. But if it's done within 2 weeks, the credit bureau will look at all those hard checks as one. Okay, so you don't want to overdo that. But don't worry too much about this because this is only 10% of your credit score. As long as you're not doing it too often, you should be fine. The last piece, and quite important too, that's another 10%, is the credit mix. What does that mean? What type of loans do you have out there? So for the longest time being a newcomer, I had one credit card that was $500 limit. My score was crippling. It was like this. It took forever to build credit. And then after a while, I called the bank up and said, can you please increase my limit? Because with a $500 limit, my 30% utilization is around $100 or something, which is nothing, right? So after doing that for a while, I had to call up the bank to say, can you please increase? After, obviously, you've built some history, maybe 6 months to a year, I don't remember now. Call up the bank to say, hey, can you increase my limit? Because with that, I can now spend $300. But that was just on limit. Then what I'm trying to talk about with credit mix is how many loans do you have out there? Do you have a car you're financing? Because usually that will be a bigger purchase. Do you have a mortgage? Do you have student loans? All of that, like if you have a broad mix, would help build your score. Caveat, you need to be really good with the big chunks, this 30 and 35%, which is your payments behavior pretty much. Your payment history, as well as your credit utilization, to start focusing on this 10%. These are small things. Because after you've been faithful with a $500 limit and you increase your $1,000 limit, you can now get extra cards. Like for instance, I have an Amex card now that I still treat the same way I've treated my $500 cards, my $1,000 cards, even though my limit is way higher. And what does that mean? I pay in full every month. Honestly, that's the best way. If you can't do it, that's totally fine. So what I'll say now is, so if you're actually at a place where you're trying to build back your debt, I'll say focus first on the cards or the credit that has huge balances and high interests. Another way to keep your eye on it is to use a monitoring service on your credit statement. Don't just not know or wait till you ask for Equifax or the other one whose name I can't remember to when you actually need to do a credit statement, right? What you can do is follow services or subscribe to services like Borrowwell or Credit Karma. I'll put the links down in the description box where you can actually track your credit score and see how things are going. Put your debt on a spreadsheet, make monthly payments to everything. And then sometimes you can transfer the ones, like I said, that have huge interest and high balances to a lower interest card. There's opportunities like that. Call the lenders and say, what options do I have for debt recovery? You can't just sit in it or postpone it to the future. It will never get better. Okay? And with, like I mentioned this earlier too, with hard credit checks, time your applications. So to say, okay, maybe I just did a hard credit check in December, maybe I'll do another one in March when I'm trying to buy cars, and just do it all at once at that same time. Some things that go without saying, common sense things, but I would honestly say some people might not know if you've never built credit, is even if there's a cash advance on certain cards, never, ever withdraw money from your credit card. Because the interest on that is crazy. You first pay a fee, but you also pay heavy interest. You're much better borrowing money off of a friend or someone you know than ever using your credit card for cash. Never do it. And with your credit cards, always, as you're starting out, look for something that has 0 fees. You don't want to be starting out on a credit card and paying things that have $120. No matter how the perks look like that is something you can always focus on for later. If you have a card that has expired or you don't have to cancel it. That's another thing too. It's like, as long as there's no interest, there's no balances on it, just make sure it's like a dead card. Just leave it, because open credit, it will still show on your credit statement as a credit, even though there's nothing going on in there. Because again, remember, credit mixes, you want to have that. So there's so much we can talk about with regards credits. Like I can also tell you a little bit more about like limits. I can tell you how to manage. I'll tell you about interest. And usually when you're choosing a credit card, there is different perks that come with it. Some of which come with cashback, some of which come with rewards. I always say lean more towards like cards that give you some cashback or rewards. Some also have things like perks like insurance protection, like car insurance. Like one of my cards actually lets me, when I rent a car, I don't have to pay insurance on there because it comes with my credit card. There's different type of perks that has with different cards. You would have to figure out what works best for you. One thing I have to actually mention to newcomers too, and I said I was going to mention this at the end, so thank you for waiting to the end, is another option. So if you go to a bank right now and they say you can't give you a credit card because you don't have the credit history, you can start with something called a secured credit card. And what that means is that it acts like a credit card. The only difference is the institutions do not give you the money or borrow you the money. You put the money in that card and spend it like you would they borrowed you the money. And what happens is that after a while of showing them, listen, I can handle a credit of $400 or $500 with a good utilization rate and payment history, then you can actually go back to your lender to say with that, and that would help you build credit score a little bit. And with that, they can now give you a proper upon regular credit card, so to speak. So I hope I've been able to help you with this and you're well on your way to getting an excellent credit score. Is anything else you'd like me to talk about that I may have missed on because human? Let me know and I'm very happy to make a video about it. So if you've gotten to this point, thank you so much. Give this video a like, give this video a thumbs up, but most importantly, I know a lot of you are watching and not subscribing. I get it, I'm engaging, I'm funny. Please subscribe, it helps me actually feel like you need this information. Thank you so much for joining and watch my other videos that were very helpful about your newcomer life. And as usual, have a lovely week and keep that smile on your face because Jesus loves you. Take it easy. Bye guys.